top three things in my notebook this morning. Number one, commodities. Number two, energy stocks. And number three, Dubai. First on the commodity side, in other news, the commodities index hit another fresh year-to-date closing high last week, up almost 12% now for the year-to-date, with food up another 2.1% on the week to up 22.8% year-to-date. If you put that on top of your little rent inflation, which is hitting all-time highs this morning, we do indeed have inflation, and we do indeed have a macro thesis to invest in, which includes energy. So that would be point number two. Energy stocks, as we've been saying, whether they be the utility kind, which is, of course, which is born out of inflation slowing growth. Oh, yes, you can buy that. Utilities up 2.2% last week to 14.5% for the year-to-date, XLU kind. And then energy, XLE, which is a broader base, obviously, of oil and gas exposure, up 2.6% on the week to up 14% for the year-to-date. So while you'll hear the talking heads say, the Dow is up, there are parts of the Dow that are up a lot more than the other parts, and a friendly reminder that the consumer stocks, which are only up like less than 0.5% last week, are still down 1.1% for the year-to-date. Don't tell anybody the consumer is slowing. And in Dubai, in case you're not paying attention, the stock market is down over 6% this morning after falling 18% now since the beginning of June. We do not think that the commodity complex has the energy side of the Middle East trade offsides. In fact, we think that they're dead on, and there will be ongoing risk born out of the Middle East as we go out throughout the summer months. So again, look for higher oil prices and more consumption taxes on the U.S. consumer. So those are your top three things.